Ladies and gentlemen, welcome to another edition of In the Pit with your host, Lobo Tigre. Our victim of the day is Shawn Khunkhun. Shawn, it just occurred to me, I should have asked you before we started. Is that pronouncing it right?
Khunkhun, yeah, you got close. So it's good.
Close. All right. Shawn is we'll stay with Shawn. Shawn is the CEO of Dolly Varden Silver. This is a story I've followed for a long time. I've actually been to the Dolly Varden mine in Torbrit, where most of the ounces are, up there on Alice Arm. I've seen the whales in the bay. It's very picturesque. And honestly, some of the most beautiful drill core I've ever seen. But it's a story that's been around for a while, and suddenly it's changing. Rather than me tell it, Shawn, why don't you go ahead and give us the overview? And then obviously I've got questions.
Okay. So thank you so much for this opportunity to come on and to be put in front of your subscribers. Like I said, when we were chatting before we hit record here, I've been a long time admirer of your work. And so I'm happy that I've got a company that warrants, you paying some attention to it. So having said that, the company's transformed a lot since I took over as CEO. So it'll be 2 years in mid-February, this coming February, that I will be the CEO of Dolly Varden. And in the first year, raised a lot of money, raised the market cap. And I think what you're referring to here in terms of this transformational acquisition, on December 6th, we announced signing a definitive agreement. So we are consolidating 15 kilometers of this Kitsault Valley trend. And we're bringing our endowment, which is 44 million ounces of silver in all categories on our side of the property. And we're marrying that with Fury's 1 million ounces of gold and 20 million ounces of silver. So we're creating one of the highest grade, largest undeveloped precious metals resources in the Golden Triangle, and creating a very unique investment proposition for investors by creating a company that's got size, it's got grade, it's in a safe jurisdiction. And so it's a very, very compelling opportunity. It's extremely accretive for Dolly Varden shareholders. And like I said, from the moment I took over as CEO in February of 2020, this company is, it's been on a huge growth trajectory, and I've been very, very disruptive. And I'm very, very happy with the work the team's done and that I've done. And I'm very, very happy about where the company is. And I look forward to growing it even further.
Okay, well, that's a good pithy overview there. So actually, before I get into the questions about the deal and then the company, why don't we just talk a little bit about why you? I mean, this company's been around for a while, and run by geologists, then by the next cat's meow, and suddenly you come along and shake things up. Why was that? And why you in particular? Why were you brought in? You're not a geologist. You're not going to personally figure out nature's puzzles up there.
You know what? I think my strengths are I can communicate a message, and I'm relentless. I'm tireless, and I can attest to that. Yeah, I don't know how many times I tried to reach out to you before we've done this. So this is so I don't quit. And so some of the large shareholders had actually approached me and asked me to be the CEO of the company. And I declined the idea for about 6 or 9 months. But I had actually been so attracted to the company that I had reached out to them, and that's how I got to know them. And then once they got to know me, they presented me with this opportunity. And for me, I think in life, in relationships, in business, it's all about timing. And all the stars lined up in February 2020, and it was just it was the right time. And the other part of it is, I may not be the one who figures out the geological puzzle. But when I joined, I stepped on with a new director, and his name is Rob McLeod. Rob McLeod is a scientist. He's a geologist. He has made many a discovery. He's also sold many a company. So I think our partnership and his technical team and my leadership, my communication, my access to capital markets, and that team was the right recipe to awaken Dolly Varden and reawaken this old historic opportunity. And it's the right team to lead the company into the future. So another pithy answer for you there.
Actually, I know Rob well, and I did see that he was on the board of directors, but I didn't that didn't communicate to me how much he would be bringing to the table. So if he's really going to be spending a lot of time, and I guess, now that he's sold Red Mountain, he has more time. So that starts to make sense. And of course, I think back on it, and one of the issues with Dolly Varden for years was always they had all these theories, but not enough money to drill and test all the targets. So if you're the capital markets guy that can help fix that, then that begins to make some sense too. And here we come with the deal. Okay, so we'll come back to the other part of the picture, but let's talk about the deal. You're picking up basically Homestake Ridge across the valley, the consolidation in the area. I get it. There's potential synergies with all that, but that project's been there for a long time too. And the old Bravo guys worked on it for years and years and years and just couldn't get no respect. It ends up in fury after multiple transactions, and now they're selling it. So if it's such a great project, why are they selling it? Synergies aside, why didn't they just buy you instead of the other way around? I mean, you didn't buy them, but how did you get this project, and why should investors believe it's any good if it keeps getting kicked around and now here it is in your portfolio?
Okay, so another good question, and it's a complicated question, so the answer is not going to be simple, but I'll try to simplify it as best I can. Fury has not sold the project. They have partnered with us, and they are going to ride the upside. So that's number one. I think what they've identified, those are some of the smartest guys in junior mining. They've sold many companies. They've had a lot of success in both technically and on the capital market side. They've made a lot of money for shareholders over the last 10, 15 years. And we're referring to Ivan and his team, and now Tim Clark's come in. So what they have identified was an opportunity to, I don't know exactly where their market cap is today, but let's say it's $125 million. They've got 3 projects. We just gave them $50 million for one of 3 projects. So that's a great deal for Fury. And I think what they recognize is having one future mill for these 2 projects is very synergistic, and all the other synergistic opportunities in terms of the technical team and everything else that goes along with that. But I think what they see here is they've seen my track record of buying projects and adding value. So when they see the $45 million in stock that they're retaining, they see that as turning into 150, 200 million, maybe $250 million of value in the future. So they're going to ride this growth with us. So they're not selling it, number one. Number two, the first thing that I think about when you started the question was I think of Eskay Creek, and I think of Skeena. And I think that's a good example of a company that 2 years ago, 2019, 35 cents a share, $35 million market cap. Oh, if Barrick sold it, it's no good. What are those guys going to do? This thing's never going to get going. Well, here you've got a company that was almost $1 billion market cap. Same thing, the same knocks were on Great Bear. It's too small. It's just a hinge. If Mark O'Day walked away from it, what's Chris Taylor and Bob Singh going to do? I don't know all the answers, but what I do know is that there's a lot of metal endowment in 43-101 compliant reports. There's a tremendous opportunity between the 2 projects. There's risks, but we're in the risk business, right? So we're here to mitigate those risks, and we'll de-risk these assets. We'll try to grow them. And I see a lot of opportunities through exploration, development, permitting, ultimately to a production decision. And we've got a great inventory to start with here.
All right, fair enough. But let's dial in on the synergies then for a moment, because these deposits are really quite different. You've got a silver dominant and high grade thing over here. Homestake Ridge is a bit of a different animal. Would the same plant even process the same material? And I get that they're nearby, but it's not like one project or one deposit that's divided by a property line and now you have the whole thing. These are different deposits, different metallurgy, some kilometers apart. And can you give us a little bit more color on how that you see that really working and adding value?
I think of all I see a lot of M&A transactions, and I've seen, more lately than I've seen in years. And some of the companies that they jam together, you know, one asset's in Yukon and the other's in California or something, or Nevada or Arizona. This one makes the most sense. And you look, let's just look at the triangle. Let's look at Ascot. Ascot acquired Red Mountain. You mentioned that a little bit earlier on this conversation. Well, those projects are, there's a distance apart, and there's a big road that has to be put in to get that Red Mountain ore to the Ascot mill. That's not the case here. These projects are only 5 kilometers apart, and I'm not the scientist to talk to you about the metallurgy and how the Dolly Varden ore is going to help the purities of the Fury ore. But we have looked at all those studies, and you know what? These projects, they are similar in a lot of ways. And you know, these are both precious metal systems. You know, there's no reason that they cannot be processed in the same facility, and they're only 5 kilometers apart. And I don't even think they're 5 kilometers apart in the sense that if you look at Dolly Varden, there's 4 deposits that make up Dolly. Okay, and 3 of them are clustered together, and then you go 2 kilometers and you've got Wolf. But we look at that as the Dolly Varden project. Then you go 5 kilometers and you've got South Reef. There's 3 projects that make up Homestake Ridge. My point here is there's this periodicity, this repeating pattern over this valley. And we've seen 3 deposits identified on the Homestake side. We've seen 4 on the Dolly side. We've got geophysical data, as do Homestake Ridge, that show some anomalies in the 5.5 kilometers in between. We will find deposits in between. How big are they going to be? What's the grade going to be? I don't know. How deep are they? But Lobo, this is the same valley. Okay, and I've never seen an M&A situation. I think, you know, I spent some time in Quebec. I remember when Bonterra came together, when they put the Windfall together with Bachelor Lake, 100 kilometers away, right? You see some of the consolidation that's done in the Abitibi, in the Timmins camp, where you're trucking ore hundreds of kilometers. Like these are right next door. So I think they make all the sense in the world.
Okay, so the immediate answer, the non-engineering answer is they're really close. They have similar metal content, so that should work. You know, your forward-looking statement there about we'll find more deposits in between was interesting. But
I have that confidence because we're like, we just put out some news yesterday. There's 2 kilometers in between Torber and Wolf. We stepped out 100 meters in between and we hit more mineralization. So again, how big are these hits going to be? Are we increasing Wolf by 10% with that hit? We need more drilling, right? You know, one hit doesn't make a mine, but every season that Dolly's gone out with these limited drill campaigns in the past, there's been success. So what did I do in 2020? The first thing I did when I took over is I raised $27 million. And, you know, once we get re-rated, if we don't need to, because, you know, we've got 16 million in the bank today, but if we catch a tailwind, if it's the right market and the right conditions, the right share price, we'll raise enough money to explore and develop these projects creatively.
all right. And in there, are you including the bulk grade gold target? I remember there was sort of a civil war at one point in Dolly Varden shareholders. There were some, they're like, oh, the high grade silver is just too small. And you know, let's go for that big gold target over there. And there was other people like, no, the big gold target's too low grade, you know, focus on high grade silver. Is that resolved? You know, or I guess the Homestake transaction kind of changes it, but is the big gold target still on the table, or, you know, that would be different metallurgy or not, or how do you see that?
So there's 2 targets. So there's one that's referred to as big bulk, which is a copper gold target that's, you know, next to the Dolly Varden project. And then there's a gold target that's coming on to the western side of the property, which we refer to as the Western Gold Belt. in terms of big bulk, which is the copper gold target that Anglo had drilled back in 2009, and they came up with some pretty nice hits. And I think that's where the controversy among some of the shareholders was. That's never been a priority for me. And there's multiple reasons for that. But the number one reason is there's enough to do on the Dolly Varden silver project that's going to keep us busy, and it will not be a focus.
Okay, a succinct answer. So then looking forward here, we are at a convenient time to talk about the next season. We're end of 2021. What are the deliverables for 2022? What's the plan, Shawn?
So first thing I need to do is I've got 21 holes to report from this season. So we drilled up to November. We just put out 10 holes yesterday. We've got another 21 to report. So that's the first thing. The second thing is we're going to have a meeting.
Sorry, where are those? Those are all on the Dolly Varden side, on Wolf and so on?
So those were Kitsault and Torbrit. So I would describe those as around resources, extension, expansion, around where the bulk of the resource estimate is. And those holes will be coming out, I'd say, in the next 30 days. Okay. So 21 drill holes to report. Then we'll have a special meeting in mid-February to vote on this transaction. And we've got support for the transaction. Eric Sprott has signed support agreements, and I've talked to some big, large shareholders, and I've got confidence that we will we will proceed with this definitive agreement, but that won't be confirmed until the 15th of February. Assuming that these projects get put together, my plan, high level, and again, it's still being finalized. We're still, finalizing those plans, but essentially it's to conduct an infill program at Homestake. So looking at, there's a huge inferred resource. I want to do a tighter space drill program, gain more confidence in those ounces, and really exploit opportunities where we're seeing high grade, big widths, because I think we're going to be surprised to the upside. And so
let me jump in and ask about that, because one of the things I noticed is that most of the ounces at Homestake are in the inferred category. They're also significantly lower grade than the smaller number in the indicated category. And I'm wondering, and maybe you're not the person to answer this, but I'm wondering, do you know, is that just because of the assumptions, the drill spacing and so on? And as you upgrade from inferred to indicated, do you expect the grade to also go up? Or is it because the indicated is where they drill the sweet spot and that's just a higher grade area than these other ounces? Do you know?
That's a really good question. And I think that the answers, there's going to be some positive surprises, and there may be some, there's probably going to be a trade-off there, right? Where in some areas we're going to be surprised to the upside, and then another, and I think, what's really interesting is there's two geological models. There's two 43-101s done, one in 2013 and one in 2019. And what we'll be looking at going forward, I think, and this will be concluded after a season of drilling, but it's probably a hybrid model. So I think we'll get to those conclusions, but we feel a lot of confidence that the ounce count will remain consistent. And then there's an exploration component to that. So let's move those ounces into tighter space categories, inferred to indicated. The second part of it is there are some down plunge opportunities. So there's some depth extension opportunities at Homestake Main. The biggest growth that the Fury team sees is at Homestake Silver. So there's extension opportunities, there's depth opportunities, down plunge opportunities. And moving forward, we are going to see two members of Fury join our board, which includes Michael Henriksen, their VPX. And we've got a technical committee right now that's currently two Dolly Varden members, one Hecla member. What we envision is to have Hecla, Fury, and Dolly represented on that technical committee. So we're, right now we've got Hecla's VPX, Kurt Allen, who heads up the Hecla representation. My point here, Lobo, is we've got some of the smartest minds all coming together, working together, helping us unlock this puzzle. So let's drill test and try to grow Homestake while we also infill it. And then on the Dolly side, we want to continue the expansion drilling at Torbrit, which is our big, meaty part of the deposit, 85% of the ounces are at Torbrit. The big opportunity is going to come in between the two projects where we've got the geophysics, where we'll want to vector into some targets there. So that, there's going to be multiple layers. What I'd love to see is after an aggressive season of drilling in 2022, updated resource estimates and a new PEA that incorporates both projects unified into one with one central milling facility. And where we're really aided is we've done 2 seasons of drilling at Dolly, where we've got 20,000 meters of drilling at Dolly to incorporate into that new estimate before we even get into the 2022 program.
Right. So there hasn't been a resource update for 2 years. All the drilling you've done the last 2 years is yet to be included in a resource update.
Correct. Both projects have 2019 reports.
Okay, very good. And so, but realistically, get all the work done, get it all compiled. Hopefully, we won't be in COVID lockdowns, and hopefully the labs will be turning things around more quickly. But you're talking end of 2022 at earliest for those reports, maybe early 2023?
No, what I'm envisioning is the drilling ends in 2022. The resource estimates get put together in the first half of 2023. And then, the PEA is probably in the latter part of 2023.
Okay. So then for nearer term deliverables, we're going into the winter and you've got a deal to close and things to do. We get that. But then when things come up again, it's basically drill, drill, drill.
Yeah. And so it's results, get out these results. So results,
pending result.
Close the deal, get drilling, more results.
Okay. Very good. And I know that you've got a deal to close. We'll see how it happens, but do you have a pro forma budget in mind for all this? And, how much money do you have in the bank, or will you have in the bank after this?
So we've got 16 million in the bank, and I want to take it a step at a time. I don't want to, the first thing I need to do is communicate to my shareholders why this deal is accretive to Dolly Varden, number one. And the message I'm telling my shareholders is, where essentially we're buying something that's greater than 2 times the metal endowment in the ground, and we're going to own 65% of the pro forma. So to me, that is a very, very accretive deal. Now there's a reason for that. Our ounces, the bulk of them are in the indicated category, so we have more confidence around our ounces. And also, I think we've done some different scenarios and different studies in terms of some pretty dramatic haircut assumptions on the Homestake. Because we have to model all sorts of different assumptions, and even if we shrunk Homestake to 25% of what it is today, it's still accretive because of the synergies of one project that's being developed versus 2. So that's really overwhelmingly compelling.
I got to say, from my perspective, I remember that PEA, and the size wasn't, if you add them together, they got close to 1 million ounces. That's good enough. But the grade of the underground mining, for underground mining, you've got not too far up in there, you've got other projects at much higher grades. It's like 4.5 grams or something. That was what really caught my attention.
If you put them together and you're looking at it through a gold lens, you're closer to 2 million ounces. You're at 1.8 million ounces. And if you're looking at it through a silver lens, you're looking at about 137 million ounces of silver.
The combined projects.
Combined.
Yeah. No, I'm talking, value accretive, the Homestake acquisition, and never mind the size or how many ounces are there. If most of them are at the inferred grade and you're going to mine them underground, then that just didn't look very exciting. And I get that the PEA had a robust IRR and it looks good. But in my mind, I had to wonder, what were the assumptions? How did they get that IRR number?
So what I did is I brought in.
Hence my question about the infill drilling, and does that upgrade not just the confidence category, but do we get a higher grade out of that too? So it'll be interesting to see how it comes out. Sorry, go ahead.
I was just gonna say, we've got a very smart engineer as an advisor who we had to look at this opportunity from a high level, and we made some assumptions that were, I'd say, 35% more conservative than Orin's 2019 or 2020 PEA. And it was still, you would still move forward with the project.
Okay.
Using
All
a
right.
much more conservative lens.
Right. So you have 16 million in the bank now. How much will you have after the deal closes?
So the cash component of the transaction is $5 million. So it would bring us down to 11. There's one thing to keep in mind. We have a shareholder that has a participation right. So that shareholder is Hecla. And because the bulk of this transaction is via share issuance, there is a dilution factor. So Hecla gets potentially diluted down to 6.5%. If they were to exercise that right, they would need to purchase 9.5 million shares. We're trading at roughly 65 cents a share right now. So we're talking about, from a cash standpoint, a cash injection of over $6 million, which pays for the cash that we're outlaying for the transaction, assuming Hecla exercises their participation right. If they did exercise their participation right, it would take our treasury to $17 million.
Okay, that's good to hear. Okay, and that's clearly enough to get started. So we're not worried about imminent dilution. And I get that Fury becomes a major shareholder. We could quibble over the terminology of selling or not selling, but they
Well, you know what? Let's not. Let's look at the agreement. So I've got an investor rights agreement where they've signed up for a voluntary escrow. So they can't sell their stock for a year after closing, number one. So I've got a year and a half from today to do as much work as I can to get this company into a place where we grow exponentially. And I think this is a top 3 takeover candidate in the area, an area that's seen $4.8 billion worth of M&A transactions in the last 3 years. But again, if I'm Fury and the company's growing and having success, I just don't see why you'd leave money on the table if you're Fury.
That's I understand, and I'm not going to try to predict what Fury's going to do. I'm just going back to the initial premise of why would they sell it, and I'm satisfied with the answer that if they're getting 37% of your company, in a way they're not selling it. They're retaining a take, and they've got other things on their plate. So this way the project advances without distracting them from other things. I do get that.
And then from their standpoint, Lobo, they're not out any cash to develop this project. They essentially have a free, there's no dilution that they're going to incur, and then the project gets advanced. All
right. Let me go back to something else you said, though, with the exploration projects in between. I have been following Dolly Varden for many years, and they've always had multiple exploration targets. I don't know if they had specifically those targets in mind, but up and down that valley, they've been poking holes. I remember, I don't know who named a target Last Chance, but that's a terrible name to drill in a market environment. But there were, it always seemed to be part of the story. Like, okay, we've got, a nice resource here down at the bottom of the valley, but we have all these targets up here. We're going to look for something more, make it bigger and better. And over the years, there's been a few hits here and there, inconsistent results. There hasn't really been that discovery that any of the chief geologists I've talked to over the years was hoping for. So as a prospective shareholder, what would make me think that your team now is going to have any better luck? Well, I guess I view it all very differently. So when I first looked at Dolly Varden, there was no resource. This is it. The company was listed actually on my daughter's birthday, February 13th, 2012, coincidentally. But they published a resource, I think it was 2015, but that resource, was reinterpreted, and there was a lot of ounces that were
put at the Dolly Varden mine, which weren't there. And so when the new technical team, the predated me, came in, they actually grew a tremendous resource at Torbrit. So they had a lot of success. And so I think a lot of investors have been misinterpreted, what happened at Dolly Varden, because there was this 40 million ounce resource that was published in 2015-16, and then there was 44 million ounces published in 2019 after a lot of drilling had taken place. And so investors were like, all that drilling, and they only grew the resource by a few million ounces. But what had actually occurred is they'd got it right. And so this project has delivered. And Lobo, there's only 33 projects in North America that have over 25 million ounces of silver. So to me, like, you could have 200 million ounces at 30 grams silver. That's uneconomic, that you're going to need $35, $40 silver to ever want to pull it out of the ground. Or you could have a 300 gram project with 44 million ounces. So I look at it as very unique, very special, with everything that's happening today in Peru and Mexico, and then now let's throw in the gold. Okay, there's a lot of projects in North America that have gold. There's 170 projects in North America that have 750,000 ounces of gold. It's not rare. There's almost 200 of them. But there are only 14 projects that have both gold and silver at the quantity I just mentioned. And we have way more than that. We have way more than 750,000, way more than 25 million ounces. But Lobo, we're the only one. You talk about the grades not being where you want them to be. We're the only one that has that gold, that silver at this grade. So its size, its grade, it's unique. It's very unique, and it's in the Golden Triangle.
Okay. But I asked about, the odds of exploration success given how much drilling has been done up and down that valley. So are you saying that what we've got already is good enough, and if the exploration comes in, it's icing on the cake, and it doesn't matter if it doesn't? Or
I look at companies like Osisko that are drilling, a million meters, and I look at like a piddly 10,000 meter drill program. We need to get going. We need to have 5, 6 rigs, 50,000 meters of drilling. We need to get more aggressive. And, is 1.8 million gold ounces equivalent, or 137 million silver ounces, is it enough? I think it's enough at these grades in this part of the world. Could we find more? Potentially. But I think we've got a great base, and but we need to do a lot more drilling to move categories, to exploit all the exploration opportunities. Listen, I took over the company. It was a small, irrelevant company. It traded 20,000 shares a day. No, it's true. No, it had this checkered past, 4 different management teams. I came in and I said, okay, listen, it's not just about Dolly. This is a good fundamental start, right? It's about the area. It's about bringing in the smartest minds who've worked up and down the area. It's about bringing capital here. And look at what we've done in less than 2 years. Look at what this company is today. It's a company that's, now got something that's, like I said, it's the most unique, rare opportunity in North America in terms of precious metals exposure. And and we're in the shadow of $5 billion worth of M&A transactions. So I put out specific goals. I told my shareholders when I came in, I'm going to get us trading in line with our peers. For whatever reason, before I came in, the company was trading on an enterprise value per ounce at half the value of the peers. I corrected that. And once I corrected that, I raised the money at the proper valuation. Okay. And then what we did is we've now made an accretive acquisition. So we've totally transformed the company inside of 2 years, Lobo. And I put out specific goals. I put out a specific goal on our corporate presentation. I put out a specific goal on our corporate presentation. Okay. And that goal was a quest for 100 million ounces. This acquisition took us there. This acquisition takes us there. Now, I'm not going to be so bold to put out a big goal, right? But there's a BHAG, a big hairy audacious goal, like there's something that's like beyond. I think it would be something, right? I'm not going to put this on the front cover of a corporate presentation like I did the 100 million ounce goal, but when I sit back and I dream, I think, wouldn't it be something if we're not just trying to attract a precious metals miner? What if we got so big that we attracted a miner? And I know what that number is, right? That number is 300 million ounces of silver. That's the number where it's every miner. It's the BHPs of the world, right? It's not just your precious metals companies. And that's, and again, I talked about Rob McLeod. Rob McLeod joining me as a director and putting his name on this. He's from Stewart. Rob's not doing this because he wants to get to 300 million ounces of silver. He's doing this because he wants to bring jobs to the Nishka, where you've got 85% unemployment. He wants to get going and start something where everybody wins. The stakeholders wins, the shareholders wins, Fury wins, Dolly wins. That's the spirit we're operating in. And I think, more people in the mining business should do what we did with Fury and Dolly, where you say, okay, let's work together. Let's get the smartest people in the room. Let's get Rob Van Egmont with Michael Henriksen. Let's get Ivan Bebic with Shawn Khunkhun. Let's work together. Let's harness our contacts, harness our energy. Let's try to do something positive.
I can see you're a little bit emotional about this, and that's a good thing, and emotional in a passionate way. So I get that, and to give credit where due, I have to say, because it's a statement of historical fact that I had written actually some years ago, that if the people holding deposits on the different sides of the valley there ever got together or got their act together, that it could add up to something significant. So it'll be interesting to see how you advance that thesis that I imagined, some years ago, and see how you do. But again, okay, so we've got
the biggest challenge I have is like my biggest shareholders come to me and say, we want to make 20 times our money. Right? Like, so they're not buying like T-bills here, right? So I've got to try to, juggle that ambition with, trying to grow in a correct, calculated, measured way and deliver results. And while our largest shareholder says, Shawn, I gave you money, I want to make 20 times my money. And so that's the challenge for any junior mining CEO.
That would be, whether the shareholder's name rhymed with Sprott or not, it would be still be. So, okay. I get it. All right. So we've got drill results pending. We've got a deal close pending. And then we're going to get back and start drilling ASAP. So we're quite busy going forward. I understand the thesis. I understand what you're trying to show. And I guess I now understand what to look for in the drill results going ahead. So I got one big question for you, Shawn. I always ask everybody this, you're passionate about this, you're excited about what you want to do. But if you want me or other potential investors out there to put our own hard-earned cash into this, I got to ask, how much of your own money, not free shares, options and stuff, how much of your own money have you put into this deal?
That's a great question. And again, Lobo, I'm not a founder. I'm not a founder who, started this company and took a 20% stake in it, right? So I will be filing insiders. But I'm currently in a position where my exposure is via stock options.
Okay, well, I appreciate the honest answer there. So there is a pie chart in the presentation right now, and it shows, potentially Fury and institutions and so on. There is no slice there right now that says management. You're telling me soon there will be?
Well, you know what? We're assuming we close this transaction, we're going to be $150 million company. Right. So it's a lot easier for a company that is a smaller market cap where they say, hey, you know what, management owns 50% of the company and management bought 12 million shares at half a penny. Right.
Yeah, no, I absolutely get that.
Listen,
but I would like to see a slice of the pie, even a thin one on there that says management.
Directors and management and consultants do own stock and have filed insiders. My point also is, though, like, think about this from my perspective. I've got a skill set where, I could go out and I could start a company tomorrow and I could, I'll give you an example. I'm a founding director of Gold Shore Resources, okay, where we approached Westone, we bought a project. I have that skill set, okay? Why did I take a job in a company that I had no history with, that had a checkered history, that people had all sorts of assumptions about? What does that say about this opportunity? That I was willing to go to work on something where I had no, skin in the game, a capital markets professional, no skin in the game. I'll go to work for stock options. Why would I do that? That's how much I believe in this opportunity.
Okay. All right. All right. Well, you've been a very good sport. You've sat still for some tough questions. I have history with the project, so I just had to ask them. And out of respect for that, I'll let you have the last word. Any last thing you want to make sure the audience, unfiltered by me, that you want to put out there, Shawn?
No, nothing. Nothing. I really don't have any last thoughts. I think I got it all out. But I do say, like, I've admired your work over the decades, and I'm honored to be here. And I'm glad that I've got a company now, because I've been, like you said, I'm relentless. Like, I've been emailing you and calling you, and we heard a lot of no's from you, Lobo. And so this transaction got us here. So I'm happy for that.
All right. Well, you did say there was a checkered history, so there was a reason for those no's. Once bitten, twice shy. But sincerely wish you the best of luck with this. We will be following with close attention. Maybe when you do get around to raising some money at a much higher share price, of course, in the future, there'll be room for retail at the table. We'll see how that goes. All right. Well, thanks. And seriously, keep me in the loop. We want to know how you do.
Thank you very much. I really appreciate it. Yeah. Sincerely.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.